All right, good evening, guys. Ken at Tortoise Capital. This is the Sunday evening podcast for August 30th, 2020. We played our best game of the week, or of the season, and tied tonight 3-3 against a pretty good team. And we came back and scored all three of our goals in the second half. So I was really proud of the girls and their fighting spirit today. It was they did a really nice job. Really proud of them. Okay, so I am uploading right as we speak the swing trade speed run for the portfolio, and so I'm going to let that speak for itself. That was about 15 minutes worth of reviewing about 50 charts. That's on the YouTube channel. I'm going to post the link to that recording in Patreon here shortly. And I go through a number of different opportunities and assessments of various symbols, which I think you'll find helpful. So I just want to get cut right to the chase. There were, Catherine uploaded three symbols for me to take a quick look at for her swing trade frames. And so I'm going to cover those. I like Apple and the frame that she's got here right now. So Apple is in a strong upward trend. Let me get this full screen so I can. Where is my drawing pen here? Sorry about that. Stand by. That was me destroying my lamp while searching for my pen. There we go. All right, let's see here. I'm going to make that bigger. Okay, so she's identified a really tight yellow trade frame here, like a two-day risk box, and she's going to go short at the break of the low and then long at a break of the high, which I like because we got this long continuous move in Apple, so that's like 20 some days. So this is clearly just reinforcing any gains, and so she's going to add a position at 128.85 and 132 to continue to exploit these gains. I like that. I also like the fact that she's prepared to recognize that Apple gains are abnormally good, and that we've got some downside possibilities of a return to the Bollinger Band mean. I mean, I think that would be a remarkable sell-off if it went all the way from, essentially a 30% sell-off from 128-ish all the way down to 110. Actually, that would be a minus 15% sell-off. That seems large in Apple. It's hard to imagine that. Like for example, if it sold off 5% to 120, it's hard to imagine that there wouldn't be buying pressure to come in and turn that right around. So I really see that as 3 steps down. You could get 1, 2 to the PSAR, then maybe 3 Bollinger Band mean. I suppose that could happen. I think there are other candidates that are more likely to gain if the idea was, hey, where can I get a 15% target in a sell-off? I wouldn't think of Apple first. I might think of energy or like a Simon Property Group as more likely. Or maybe something like Virgin Galactic, which is already suffering, and even Wynn it's not in the tech space, but Win has had a really nice rebound, and it doesn't make sense why it should. So Win is a more likely 15% sell off. However, we also got to respect what we see on the chart, and so although I think there's a possibility of a correction here in Apple, and that 124.53 would be the logical place to get it done. And if I was long at 128, that would be about a $3 stop, and that is approximately 2%, a 2%. So I like the long side. I would be careful on investing on the short side on a swing. I might play that as a tactical day trade, but it's hard to argue with the strength in Apple, particularly after the 4-to-1 split, which is going to trigger a lot of people to come in and start buying this thing because now it's cheap. So I think that there's going to be buying pressure in Apple. But I do like the fact that we're looking at both sides of the trade. So that's Apple. Long side for sure. The short side under advisement, and I would start it as an intraday trade if I were going to make that play, but not expect it to be a swing trade. Like as for instance, I would actually prefer Devon as a swing to the short side, which I'll talk about here in a minute. All other things being equal. Yeah, so Devon Energy, in contrast, I like because we've already seen a recent swing high, and it's already sold off to a measured low here at 1016. So you can see that if 1016 fails, this thing is really going to fail all the way down to the long-term fair value at about 844, right? So that the downside is not as hard to believe. So getting short from 1077 would get us to I call that $10. So that's already a 7% sell-off just to get to here, and then there's 15% to here. So that one's easier to believe in because the size of this leg is the size of that leg. And we've already seen this thing able to fall from 15 to 10. It's gone from 15 to 10, and it's done that in 3 weeks. And it's had one bump and one rejection. So really, this entire move here is a critical state, which Catherine has quite correctly identified. So the upside target is easy to see, and I might take it, first step to the PSAR, second step to the peak of the RL10. So I like those. So this breakout here from 11.25 gets a second position here, and then a third position here, and it's off to the races. But we would respect this resistance level right here. So if it actually got that far and then started to bail, we'd be tight to we would be quick to capture that. If it doesn't fail there, then the next price up is the hump of the dragon, then the hump of the RL10. So if this would be the first target at 12.8, then 14 is target 2, and 15 is target 3. So all of those moves are embedded inside this little seed of goodness. But also on the downside, we can see a strong argument for why that trade would be good, and especially because it just went into the winter. And when it goes into the winter, it can stay in the winter for a long period of time. So that, again, that was 3 weeks in the winter. And it's had a nice spring. It's had a nice spring and summer, rolled over in the fall, and now it's just entered the winter. So this one is perfectly postured to go in either direction large. So this critical state, I just think supports a move in either direction nicely. Okay. And I can see a 15% move in either side with equal probability. So I think that one is to be preferred on the short side. And then we would be watching if XLE was weak and if Devon was weaker, then let's say the S&P. In a perfect world for the short side, you'd see the S&P down, but XLE down even worse, and then Devon worse than XLE. Then that would make Devon really a low risk short, and you could look to see it get all the way to 850. So I like that trade frame. And Devon is one of those that trades like a frog champion. It is a frog champion. Let's shift now to the Walmart. To the Walmart. Alrighty, so we've got this nice trade frame right in here. I think the upside is easy to see. The downside, I can also equally see, because this had been in a tight Z3 pinch here. It had. You can see that the Z3 lines converged, and now you had a really tight range in here. And then in the last 2 days, it's given a really strong move, and it has cleared the previous RL10. So that's kind of all you need, which also cleared the previous one back here as well. So both of those support and resistance levels, which defined this range, that has clearly been violated to the upside with these 2 days. So any continuation from here at 141, you can safely add, and then 143 and 144, you can get a second and a third position in, and then off you go. And then you could get this size of a move from 118 to 134 is plus $16. So if you added, even 10, that would get you to 150, well off the chart already. So, plus $10 would get you to, plus $10 would get you to 151. And 160 is now in sight. So the upside is really strong. The other side of the trade, though, is equally interesting. Because if these 2 days were a head fake or a false breakout, then let me get this cleared up so we can see. Come on. So now the price that rejects this 2 days. So you get this portion of the move and that portion of the move, and it closed really well. So 137.79 though is a rejection of that. And now, if that were to happen, the target is the Bollinger Band mean, and the intermediate stops here would be the PSAR flip in the bottom of the dragon, and then probably this part of the PSAR flip. So we said that was target 1, 2, and 3 to the downside. Then 137.79 would be the trigger to get short, 2 from here, 3 from there. And then if the Bollinger Band mean fails, then the belly of the dragon or the RL90 would be the next logical ones. And then you'd have 3 positions short, and that would be fine. And we know that Walmart can fall. If this were to break, we know it can fall that far, in 3 days. And that's a move from 132 to 122. That's minus $10 in 3 days. So again, the Walmart trade is in a critical state because there's a strong argument to be made for a large move in a short period of time in either direction. And she's identified here that the upside is actually possible because it came to the 0 line and then failed to fail and now has started to move up. So that's what these 2 days actually represent, is the beginning of that next leg up. And again, if we take this as a $10 move from here to here, we've got a second $10 move, a third $10 move that could take this to, again, 151. We like it. Okay, so nice job on that one. I want to talk a little bit about Bob's longer-term study. He's looking at a 9-day. Did I zero that out? Tell me. Sure did. Right, bear with me while I recover that one. I accidentally erased it. Let's see. So Bob takes a look at a 9-day SPY. So it's just a day. It's a day short of a 10-day. So it's just a little bit faster than the 10-week, or 10-day, or 2 weeks. And he uses a slight modification and an addition to our framework. And so what Bob notices are the followings. So he's using a 9-day period. And I like that one because it front runs a 10-day. So a 10-day look back period, if you're looking back 10 days, you get a 5-day and a 5. So as you start looking, a 9-day lets you take action 1 day sooner than the guy who's waiting for the 10th day to build. So he's waiting for day plus 10 to collect his information together. But you can see 90% of the trend looking at the 9-day and then acting here, and then on the 10-day he acts. So you're actually front running the 10-day or 2-week look back in a little bit. He likes using the RSI 8 with a moving average of 3, and he makes his Red River a little tighter with an 8 and a 0.05. And that feels appropriate when you're using a 9-day, because 1030 MACD would be really a long period. On his MACD, he likes the 430 because he believes the 4 gives him a little quicker turning point. He is seasoning this to taste, but the principles are the same. He's looking for those major turning points, like this one at the end of 2019 was that big 10% sell off, which then triggered this amazing run And here's the maximum excursion on his MACD and the turning point and where it enters the Red River. So you get a nice, like a 1, 2, 3 entry here. And you get a nice entry here at 280 if you just wait for the PSAR flip, which is nice. Then the next PSAR flip you get is this one. And here's where it violated. And so that PSAR protects you against that great big sell-off. Here's the turning point. Notice that maximum excursion to the downside. By this time, you have a turning point here, you have it entering the river here, and it leaves the river here. So there's really 3 different inflection points to tell you this thing is not failing any further, but instead is starting to improve. So how long do you want to? Maybe that's a third and a third and a third, or this is aggressive, normal, conservative. So your turning points would have been like 1, 2, or 3. I could even live with crossing the dragon here. But certainly by this time, where you've got what's become the spring, because you're looking at almost a 2 weeks per candle, I think you can afford to be aggressive in here, and then your stop visible at 270. So you can actually be getting long at 280 with a $10 stop in using these time parameters and still have quite a bit of buffer, right? And that little ritual has kept you in the whole way. Now, what he's noticing is that the 10-day period has gotten kind of thin. So this would be typical of a move that was strong and then started to roll over and finished in a doji, and then could go this way, or it could stabilize and go sideways, or it could stabilize and then break out for leg 1 and leg 2. So this doji, Bob's got marked up as a potential critical state. The fact that it's at the previous, it has just taken out the previous peak, should not be ignored either. And then if you look at these natural turning points and where they are on this vertical stack, this would, we're at the same level where in previous times this has signaled a peak. There was a short sell-off in here as well, the big sell-off here. So this is one of those critical states. You got to be careful in both directions and follow the price and not your preconceived notions. So just sharing this technique with you from Bob, the 9-day lens as modified by his use of the RSI and a modified MACD. Same principles, though, about pinching and stretching, failing to fail further. That's key. These little trend resumptions are reasonable places to get going. Like even this one gets you in at about 310, 320 on the way to 330. So there was still a plus 10% available from here, even if you didn't get these earlier entries and resumptions. Okay. Pavel had sent me some notes on getting re-energized, and I posted a video back from May 11th where we talked about this, and I thought the lesson then was so good that we're just going to repeat it. And I've posted both of these in the handout section for you, so I'm not going to repeat the whole thing. But one of the things that you can do to deal with the emotions that are right up in your face is this kind of a technique I call draw your energy map. And remember, the way you decide to draw it is just a choice. And it's connected to the idea of time, will, pattern, and money, with willpower being the crucial one. And that's what this is about, is how to build up your emotional bank account. And we want to make bank daily, not just money. Not just money, but also energy. Come on, Kenneth. So what that video will do is walk you through this um, this 5-part energy map. So over on the left-hand side, you would be drawing your current feelings about how you feel trading is sucking the energy out of you. What is it that seems to be conspiring against you? Over on this side, you would draw a desirable future state, which is what you want. You don't want this negative state over here. You want this positive state where the act of trading is not an energy drain at all, but it's an energy pump. It gets you stronger. So, well, why don't I just do that? Why don't I just leave all that behind and jump the fence and go over there? Why don't I just do that? Because it seems too hard. It's trying to do it all in one jump is too much. So what I've developed here is this idea of a transitional frame. So you draw your first energy map and then all of the little beliefs that go into supporting why this should be the case. And then you take this desirable future state about all the things that you would want to have in place if you could just design it from scratch, and then all the things that would have to be true in order to support this state in the future. Now, the key on this one then is the idea of the transitional frame, in which you can say, well, how do I go from all these beliefs to these beliefs over here? Well, I go through this. I can there are some things that I can do to begin to leave these behind, or things that push me in that direction, or things from this side that pull me over, so I can put some how-to transitional beliefs and use powerful forces for the purpose of good. And then I can see how, by operating on the changing of beliefs to go to this transitional state, that frees me up to go to this future state. Well, that video will talk you through a way to do that. And I show you my energy map here in a second. So I describe in that video, it's about a 35-minute lesson, and in that video I talk you through this. I talk you through this map, and I really portray how the act of trading can feel like an unfair tug of war, but I can just make a decision for it to be a good thing, to go from red to green. An act of will. It's a decision. So that instead of energy draining me, energy is pumping me up, and it invigorates me. Instead of trading drains me, I can create the mental conditions where it invigorates me. So I connect these two frames in the following way. I list all of the reasons why it could feel like an unfair tug of war. All these forces that are conspiring to pull R downhill, to make it hard for me to get uphill. Stress, time, gravity, inertia, all the reasons, all the odds being stacked against me. And then over on the positive side, I describe what that desirable future state would look like. Just like the water cycle goes from rain, into rivers and flows and then evaporation. The whole water cycle is a natural process. And all I have to do is my job as part of that and be cognizant of the seasons of winter, summer, or winter, spring, summer, and fall. I can do some emotional exercises not to get burned out. Use of the zero state, recognize momentum and use it. Don't fight it. That there's an infinite number of trades working for me. Adopt the philosophy of water that just flows, remembering that tomorrow's another day. I don't have to get it all done today, and that I can just connect to natural forces and enjoy the moment and just treat it like another day at work. I don't have to reinvent everything every day, but if I just find my space in the middle of all this and just get paid without trying to be perfect, then I can get there. Well, what are the beliefs that lead to this kind of map? Well, that trading's an external activity, that I am the one that has to initiate everything, that everything costs, and that tension and uncertainty are a natural part of this, and that it feels like I'm climbing stairs, and that I have to be expert at controlling myself and my emotions. Well, this is all an energy suck. What I want are a set of beliefs, and I want to adopt these where I can free myself and just get carried along by natural forces. And I just sense and respond where that stuff is flowing like water. And instead of working hard, I can just float and steer and be swept along by the power of water going in natural directions. And if I can map those out and be on the side of the natural forces, then I can let the natural order of things do the work. I can be the house instead of the people. Well, the transitional frame beliefs then are things where I have to learn how to relax and to recognize ecosystems and associate ecosystems and water flow with trading processes. I have to learn the ways of the river and the dragon. I have to respect the other side of the trade and just do enough to do my part without trying to be perfect. And then if I take these beliefs and replace them with the transitional ones, I will have adopted the right frame of mind that now then allows me to move on to the even more preferred set of beliefs that allow this to become the reality. So I've gone from a belief mapping exercise to a transitional state to my final state and replaced all of these things on the left with this blueprint and a dream state of the far side. But it's the work at the belief level, psychological work, to be able to recognize these natural forces that are pushing and pulling me in that direction. Well, I talk about that in that 40-minute lesson on the link. And so I provide you this blank so you can do that work yourself, and then one sample of it. It turns out that this process of reframing, this idea of doing a before and an after, and then this transitional state of beliefs, working at the transitional on the belief level, is a reliable way to get this done. We are using that in the End Racism workshop with the true storytelling, and I've used it with my soccer team, and this is a very powerful yet simple one-page technique that I offer you. The last thing I want to cover is just some feedback got from Eric, and just to show you where this work can take you. Just amazing work that he's done. This one is also in your handouts. So he has been adapting the principles of hybrid trading and the blended monthly rebalancing and some of our trend following ideas and match that up with some European ETFs. So what he's done is essentially taken an AI directed ETF model that's built on relative strength. And it has a set of bullish funds, and then for bear markets, a mixture of gold and bonds. And he's going through a weekly analysis to come up with the top 4 to 10 components in the bull funds, and then doing like a monthly rotation. And he started off with a 10% stop, and he's changed that to a 10-week moving average stop, and has been learning to adapt and modify his rule set in the way that we teach. And here are his results over the last year. He's got about 60 trades, 44 winners, 15 losers, no scratches. Got pretty good SQN numbers. He's got 3 to 1 winners, and the winners are paying 2.5 to 1. And when you do that, this is what your histogram will look like. And he's done a really nice job here. And again, the 3 things that I look at first, no losses greater than 1R. He's got that. 2, I look for a normal curve between -1 and +2, so that it looks like a natural repeating process for the bulk of his trades. He's got that. And 3, he's got the possibility of a fat right tail. So no losses greater than 1. He's got a natural, normal looking curve from -1 to +2, and that this portion of the curve is positive expectancy. And then he's got this possibility over here of a fat right tail. And that's what his equity curve looks like. +60. +60R, that's his trade sequence plot. It's looking pretty good. This is just a screenshot of some of the analytics that he uses to reverse engineer the holdings of that AI generated fund. And you can see that it's doing well compared to the S&P. So that's just the big broad funds. What he's doing is taking a specialized subset of that and picking the best of the best, and then using those to trade in a way. And here's his trade log. And so what he gets is pretty impressive. And now for his text write-up. So at each month end, come on, Kenneth. Let's try that. Why isn't that highlighting? So at the end of every month, he's bought a selection of funds. Oh, there it is. It's a fund that's offered in the EU. He has changed the stock selection criteria from the top holdings to those with higher momentum than the fund itself. So he's doing a subset reverse engineering. So it's been a little more aggressive, but he's added a weekly stop rule. That's where that 10-week moving average is. And it's basically, when you convert that stop loss to tortoise language, he's basically looking at weekly charts, and if price closed below the weekly dragon on higher volume, then he's using that as a sign that it snapped. Now he's being careful and cautious to not treat this as a universal thing, because he has recognized that except for the pandemic, this has been a bullish run. So he's doing some beware of curbing his enthusiasm. And he's also identified some additional areas where, with a little more research and effort, he could get better. The system SQN suggests that that is also possible. And he's got some pretty nice results. The annual or the year to date is up 35%. And that's even while having a very healthy respect for the vulnerabilities of this market. So there's nothing wrong with that. And all systems go. And what he's finding is that, I want to show the text of his commentary, which I thought was really well done. Let's see if we can find that. This is some very good self-awareness. And sometimes it's, not able to see our nose in front of our own face. So here's what he says. I just wanted to check in the last few months, he's been moving more towards the longer time frames. He's using the Euro group, that's that team of guys that gets together weekly as a collaborative learning group to find out. So they are helping him refine what actually works for him, fits his beliefs, goals, and aspirations. So the power of the collaborative learning groups and accountability groups is just amazing, especially when you find guys that have similar outlooks and perspectives and give you that accountability. And he makes a pretty interesting statement. When I look at the results of my system, I really don't understand why I try so hard to do even more. Well, yeah, 3-to-1 winners that pay 2.5-to-1. And so this systematic approach will probably pay 20 to 30% per year while spending only 10 hours per month. So his question for me is, hey, Ken, how do I move on from here to turn this into something really big? And I realize I have my trading must be absolutely systematic in order to be completely calm during winning as well as losing. He knows himself enough that if he keeps solely to the rules, then and only then will the individual trades be irrelevant. But if he starts overriding his rules and lets his feelings in there, then the edge dissipates. So he knows for himself that he must be absolutely systematic, and I think he's right on the right track. And then that way he doesn't have to listen to that inner voice that says, hey, it could have been 3.2 instead of 1.8. That voice actually doesn't matter. The voice that matters is the one that says, hey, take a look at the statistics of the large numbers. What you have, Eric, is a dice that wins 4 out of 6 times, 2 out of 3. Actually, it's 3-to-1. And when I win better than twice what I lose. Why fight that so much? So that's the psychological insight that comes from having a standardized set of rules, following through, letting the system generate enough data with a stable rule set so that you can actually perform the analysis of large numbers so you don't get caught up in the little things trade to trade. So I'm going to give him some advice on what to do about how to scale that. And then I'll do that as part of our individual coaching. But I just wanted to share with you what happens when you do the work. When you do the work, you find yourself in some very interesting positions, right? So I just wanted to share that with you. Okay. And that's everything I got for us today. We're into this. So take good care. I'll get this published and posted. The speed run is already available there. It looks like it just finished uploading at YouTube. So off we go. Okay. Hey, thanks for hanging in there, guys. Thank you for your patience, and we will see you in the chat room ready to rock tomorrow.